How are these like APIs sustainable, and how are their revenue models being projected and being created? Yeah, so I think it's very important that users are actually educated on transparency and educated on like information, like the current scams out there, the current phishing scams, the current smart contract scams, how they are implemented, etc. So I think it's good for them.
Yeah, I think sometimes when it's too good to be true, it's actually too good to be true, right? I'm conscious of the time. We have 5 minutes left. So I just want to turn to the audience. If the audience has any questions, if you want to raise your hand. There's a gentleman at the back. Can we get the mic to the gentleman at the back who has a question? If you could just do a brief intro of yourself as well, that would be great. And whether you're directing your question to the whole panel or... No sound.
Hello. Oh, there we go. Okay. Cool. Thanks for the presentation. My name's Jeffrey. I lead a developer training program called Rare Skills. We mostly focus on Solidity, but you mentioned Rust. Tristan, this question is for you. What kind of security research do you see being done in that area? The material out there is not as widely available as for stuff that's related to the EVM. So what kind of security research areas are getting a lot of attention right now? Where do you see a lot of the development investment going?
All right, okay, so where are different parties are investing from a cybersecurity point of view? What areas or, within the infrastructure, is that what you mean?
Oh, sorry, I meant specifically for Rust, because that was something that you mentioned.
Oh, for Rust, sorry. I didn't catch that. Anyone who is familiar with Rust?
I think for my end, I think we are more focused on Move. So for Move side, if you know Move, the SUI and Aptos, so there's a lot of security infra being. I'm not a technical person, but there's a lot of security infra improvements in the SUI ecosystem. So in one case is that we are using like a machine learning and AI in terms of how we were to like secure and audit Move projects. So our AI actually uses like past historical events, exploits from like the Rust and other chains, and then we actually implement it into our Move ecosystem, into our Move audits as well. And yeah, so we identify characteristics of like basic exploits and technical exploits, and then we actually build it into our audit reports when we are doing audits for like Move projects.
All right. Does that answer your question, Jeffrey?
It's not really
yeah, no, that's a good answer. We'll talk some more afterwards.
Slightly, all right.
But I will get back to the Rust part, yeah.
Anyone else want to? Okay. Do we have any more questions from the audience? No. Okay. So, right. So let's just wrap up the panel. 2 minutes, right? So very nice. So what do you think, looking forward, what is the cybersecurity landscape going to be looking like for the custody of funds? So we start with, I think Tristan is quite eager. Okay, Marouin, you can start.
No, for me, it's really, I'm seeing multiple threads of builders optimizing for particular areas of cybersecurity in Web3. The hope is that perhaps there is a one integrated solution or approach that you can just use as a project. Unfortunately, we're not there yet. So until then, we just have to keep encouraging these individual projects to optimize for their own area. And then if you are a project building as well, think about how you can compose these different things to optimize your own security DevSecOps process, but also to maybe build an easier platform for other projects to use. Again, we're still a bit early days to have that full suite of coverage.
Yeah, still a lot of work to be done, right? And Lily, your thoughts for what the coming year is going to look like in the midst of all these crypto winter conversations?
Yeah, I think with the 2022 as the year for big institutions to lose money, the market and the players like us now, we have better awareness of what big institutions need. So it's a year of builders to build up more accessible and secured wallet infrastructure for institutions. So it's our mission to devote into it.
All right, okay. And Zhu Ling?
Yeah, I mean, I'm really excited to see how mass adoption could happen with a more secure way for average people to store their assets. So if there could be some kind of like a authentication method, or there could be some like a social recovery method, I don't think we should expect everyone, to keep their private keys themselves, unless they have a certain level of, technical know-how. So that will, of course, also spark a lot of innovations, right? How to do custody, secure way for the mass market.
Thank you, Zhu Ling. And Tristan, last words.
I mean, I just want to add, blockchain is a very nascent industry. So, everything is evolving and technology is evolving. So, it will always be a constant fight between hackers, exploiters, and towards the security safeguardians. Yeah. So I think further down the road we will see who eventually wins this fight. Hopefully our side. Yeah.
Yeah, it's still going to be a cat and mouse game for a while to come. So yes, so on that note, so thank you very much to our panelists. Let's give a round of applause to all of them. Thank you very much.
Thank you, Jay.
A round of applause once again, ladies and gentlemen, to our panelists with the title of Cybersecurity and Custody of Funds. Next, let's welcome our speaker, Toya Zhang from CMO of BIT with the title, The Opportunities in the Current Market for Established Exchanges. So a big round of applause once again, everyone, to Toya Zhang.
Hello. Hello, everyone. Thank you for staying. Thank you for being interested in the opportunities of exchanges. So my name is Wuran Toya. People call me Toya for short. And my company is called BIT. It's not CMO BIT. I'm Chief Marketing of BIT Exchange. So today, what we're talking about is opportunities for exchanges. But first, before we dive into any of those, let's have an imagination of what life will be like in 30 years. So at that time, I'm almost 70 years old. I'm feeling lonely, sitting at home, want to order some food. I log in my DID, wandering around, find a restaurant, order delivery food, pay some tokens. And the restaurant at the same time will receive a visit, which represents its popularity. I think they will receive more if I give them a review after I dine. After the dinner, I don't feel well. I call my daughter and say, hey, remind me again, how do I book an appointment in the metaverse for doctor? She reminded me, and after the call hang up, she also reminded me and saying, hey, Mom, you know what? Toggle on share your medical record, and then you can get a discount in the treating fee. So that's my imagination of how life will be like in 30 years. It's fully digital, immersive in metaverse. And also, what we're talking about here is the technology being supporting that future. And the technology we're talking about is different. It's not just a blockchain technology. We're in this industry, sometimes we're feeling very narrow-minded, like everything is about crypto, everything is about blockchain technology, but it's not. We are in the age where technology is exploding. We're talking about artificial intelligence. ChatGPT is being super popular these days. We're also, people forgot about wearables, like the goggles. Things are not taking the heat of the media these days. But also computing, like edge computing, 5G, 6G, but 30 years after, I'm thinking about 10G, maybe it's not too bad. And then that's the things that we're most familiar with, which is blockchain technology. We are distributing a distributed technology ledger book, and we have decentralized the social media, we have decentralized the network. And what does it mean? Being supported by all these technologies, it means we have owned data, like personally owned data. And the data can be your personal data, can be your medical record, it can be a tweet, an email, an NFT, a piece of your security, a piece of your property, a piece of your Louis Vuitton bag. And also, this owned, like being certified digital goods means you can trade it. When you can trade it, it means it would have a value when there is demand. And eventually, we're experiencing an age where there will be borderless flow of info, borderless flow of data, and plus with fractional transactions. So it's not going to be, I sell a property as it itself. It's not going to be like, oh, this is something that I sell as a whole, but it will be fractionalized as like 1% or 8 digit after the dot. What I'm describing here is, you can call it a metaverse age, you can call it a Web3 age. I think I'm giving it a name. It's probably not original. It's called Digital Economy 2.0, when your daily life is fully intertwined with the financial market. We're entering the age when, so far we called it like borderless flow of information. Eventually will come to be the borderless flow of value. So like as I described at the very beginning, you order food, you visit the doctors, that's financial happening every second, every piece of information. That was my dream 7 years ago when I joined this industry. Very, very beautiful, bright in future. And after that, this is what happened in 2022. The reality taught me a very harsh lesson. Each logo above on this slide contribute great story resource for Netflix show. And I have advice for Netflix. Take your time of developing these stories, because people who are interested in these stories may not be able to afford Netflix subscription anytime soon. So we are witnessing last year 50 billion valuation. This is incomplete calculation, by the way. Valuation of companies filed bankruptcy. And we're witnessing 0.7 trillion market value being wiped out by Terra Luna alone over around 1 week time, if we still remember. So these are the things that happened in 2022. But if we zoom out, cryptocurrency, since the birth of Bitcoin, it has been 14 years. 14 years, what did we do? This is just some numbers that I can share. We have 22,000 type of tokens. They may list it in centralized exchanges, they may not, but they exist. We have 540 centralized exchanges plus decentralized exchanges. And in spot market, we are witnessing, this is the latest number, around 60 billion daily trading volume on spot market alone. And the futures market is probably going to equal the same amount of this. While options market is shamefully not that much, 2% of it. Well, looking at the numbers, if no comparison, seems to be, okay, fairly impressive, 14 years of development, like, what else? If we put them in a benchmark of the traditional equity market or stock market, so far, around more or less 70,000 listed companies. Globally, 140 stock exchanges, and the trading volume is around 550 billion daily. So the easy math here is, at this moment in the crypto space, there is definitely an oversupply of exchanges with not matching amount of trading volumes. We have another comparison. This is a comparison, oh, what's happening there? So this is a comparison about the adoption. People are talking about the adoption, like when is the mass adoption coming? Like my previous panel speakers are also anticipating mass adoption. So I'm choosing the field which is game. supposed to be the easiest to adopt, right? People are interested in games. So the most popular crypto game, Axie Infinity, everyone should be heard of this. The user, the player of Axie Infinity is amount 0.8% of the players of Roblox, which is a very popular game nowadays. So this is the adoption that we're talking about. After 14 years of frenzied development, we're having conferences and meetings talking about this technology, talking about adoption all the time, and this is what we achieved. And in terms of ownership, crypto ownership, there is around 4.2% of world population owning crypto at this moment, and it's after the massive adoption increased to 2% back in 2022. So that's what we're talking about. Why? Let me slow down. I'm being very aggressive. Why is this happening? So looking back, maybe we can borrow some brilliant guy's idea from Ray Dalio, who is explaining that there are both a financial economy and there is a real economy. Though they're related, but they're different. Each has its own supply and demand factors that drive it. In the real economy, supply and demand are driven by the amount of goods and services produced and the number of buyers who want them. So if we put this financial economy and a real economy into what we're experiencing here in a crypto space, the goods and services, namely the game, people who wants to buy it are minimum. People who are playing Axie Infinity, if you ask most of them, they're not because this game is brilliant. It's because the reward that you can gain from this game. So what we're experiencing here is that financial economy is blowing, and the real economy generated from the crypto space is minimum or negligible. However, don't despair, because crypto itself is supposed to be finance native. Since the born of crypto, it is about finance. Since the born of a Bitcoin, it is supposed to be a peer-to-peer payment token. So it is supposed to be in this way. But it's overhyped because the nature of it, there are money pumping in. But if Ray Dalio is right, the financial economy is going to come and contribute to the real economy eventually, because money will flow in, helping the technology development, and eventually go and infiltrate into the real economy, and then achieve what we imagined 30 years afterwards. So when the internet was born, back in 1983, when I was not born yet, it took the whole financial system 13 years to achieve the dot-com bubble burst. 17 years. So dot-com bubble burst after the internet were born. And we have experienced the 14 years since the Bitcoin is born, and a very, very disappointing year of 2022. So I hope this is something that we're finding similarity. And the dot-com bubble burst, if people who are experiencing that will remember, it was due to the media frenzy, the overvaluation, abundance of VC. Sounds familiar about what we're experiencing today. So back to the topic, what we're discussing is what are the opportunities for exchanges. I have 2 points to share here. And it's not only being relevant to exchanges. First, the thing is, we need to make the financial economy healthier. We need to stop the blow of the financial economy even further, because the real economy is already quite a minimum compared to that. And secondly, we need to facilitate the value to flow from the financial economy to the real economy. Not just the responsibility of the exchanges, it's probably going to be the responsibility of every player in this industry. And how can we make the financial economy healthier? the reason of all these companies collapsed that I was mentioning before was due to not only just an over-financed ecosystem, like issuing token, lending and borrowing, staking, like inflate the whole space, but also because there is not appropriate market structure, risk management, regulations, third-party monitoring, yeah, many things that we can think of. So the solution we're talking about first is about market specialization. This was crypto exchanges landscape before. Well, still. So you run a crypto exchange, you run a launchpad to support new tokens listing, you have lending and a borrowing business, you have trading business, of course, that's the core, you have a wallet, NFT, staking, asset management, custody, DeFi, everything at once. Recently, even CZ said, oh, it's a great idea, somebody please do it, because we can't do everything. So what we are experiencing here is that, how many people can understand Chinese? There is an old saying in first line of Romance of Three Kingdoms, 天下大事,分久必合,合久必分, which means the world's general situation matches the long dividing and divides the long matching. So we just said we have an oversupply of exchanges. It's going to merge, some will be outdated, and there will be conglomerates. But this style is hard to scale, if you think about it. Like, we kind of have several, 3 or 4, like huge superpower exchanges. It's hard to scale. You can't penetrate a market. You can't help with the adoption. You're only scratching the surface of the 4.2% of the populations in the world. It adds complexity to the compliance. So the compliance is going to say, oh, you're running exchange business, you're running a custody business, you're running a financial service businesses because you have lending and borrowing, and also it hinders healthy competition. So for exchanges, we're proposing like the opportunity is pragmatic market segregation and specialization. Before me, there was a panel talking about custody and security. And we're very like to hear the similar ideas that, oh, users are getting their fund in a custody, in the self-custody wallet. And what afterwards? What if they want yield? They want to trade. They want staking in DeFi. So they need to move the fund out. What if you don't? You don't need to move fund out. You can conduct all these things. So there is a layer, service layer, because on here I can't see it. There's a service layer, there's custodians, brokers, prime brokers, asset managers, self-custody. That's the service layer that users are interacting directly to keep the security and keep the ownership of their token. And there is a liquidity layer, which is centralized exchanges or decentralized exchanges, depending which is your requirement. If you want deeper liquidity, you go to centralized exchanges. If you just want new token, you go to decentralized exchanges. If you want DeFi, that's another story that we can take. And underneath, there is infrastructure layer, which a lot of us in this industry are building, like layer 2, layer 0, layer 3, and bridges, cross-chain protocols, interoperability is building, and there are blockchains, of course. So when users are interacting, it's like the internet. They don't need to go to internet and write code about things themselves because there's a service layer, people can interact. And most importantly, what we are advocating is off-exchange settlement. So this is something that will solve the problem that FTX is creating. Like they're moving users' fund here and there. So yeah, this is like market segregation and specialization. I think my previous panel would also love to hear about this idea because meaning they are the first contact point of users' money. And of course, as financial market matures, there will be, as cryptocurrency exchanges as us, which is specialized in options trading, would advocate for more advanced and sophisticated risk management trading instrument, which would be like crypto options trading. And now we only have Bitcoin and Ethereum dominant as the crypto options trading, and altcoins will gradually being picked up. So until now, you were probably thinking, oh, this lady is feeling agnostic about traditional finance after a one disappointment year of development of this industry. She's replicating what's existed for the past 50 years that are developed in traditional market. First, on my defense, it developed into this structure for a reason. And secondly, in the crypto blockchain space, there is specialty and uniqueness, which is about Web3, which comes back to what my point was. If you imagine like Google, Facebook, Uber, all this type of businesses as Web2, and what we described originally, including OpenSea as Web3, exchanges should play as character, we can call it hybrid or Web 2.5, because, where is it? Here. So centralized exchanges or decentralized exchanges are interacting with the infrastructure layer immediately, like directly. So there is possibility for the exchanges to provide services to the Web3 space and build portals to DeFi or DAO and advocate for everything that is growing from there. And you aggregate users integration, creating portals to the Web3, and that's where you also can interact with the future economy, which is Web3 or digital economy 2.0, that we just gave the name to. So coming back to my point, that there are 2 pointers that we can give. Opportunities for exchanges. First, make the financial economy healthier by adopting market specialization. And second, to facilitate the value to flow from financial economy to the real economy by encouraging money and user adoption to the Web3 space through the exchanges as a portal. If you can think of other portals, welcome, but exchanges so far is still one of the most interactive places in the crypto space. Thank you. That's my speech. Just in time, right? 9 seconds. Well, I should ask if anyone wants to ask what questions. Time out.
A round of applause once again, ladies and gentlemen, to Toya Zhang from CMO of BIT. For those who have any question you'd like to inquire, you can meet Toya personally. She'll be waiting for you guys over here. And we'll move on now next to the final speaker before we head on to a break. Let's welcome with a big round of applause Tobias Bauer, Principal at Blockchain Founders Fund, with the topic Web3 Startup Strategies. Round of applause everyone for Tobias.
Thanks everyone for joining me today. It's always a bit of a challenge being the last speaker in front of a break, but please bear with me. I'll keep it short and hopefully a little interesting. So we run a venture capital fund called Blockchain Founders Fund. We're based here in Singapore. I see a lot of familiar faces here. My big fan here in the first row. We're trying to be quite active, and I think every kind of VC conversation I have right now starts with the question, are you guys still deploying? And maybe founders, you guys kind of know what I'm talking about, and a lot of funds obviously are quite careful in this market and have pushed back, slowed down on doing that. And we also have to an extent, I mean, we're still deploying slowly that we might want it. We've done one investment in 2023 so far, and you guessed correctly, yes, it has something to do with AI, obviously. But over the course of the last 3 years, we've done over 110 investments in the space, so the portfolio is slightly growing. we are extremely excited about pre-seed investments and seed stage investments. We do anything up to $5 million in checks. We run around 250 million AUM across 2 funds, and are quite more or less agnostic in terms of what we look at. The only thing we don't touch is hardware, so if you build another cold storage, then we're probably not the right one for anyone out there. But at the end of the day, we see a lot of different companies in the Web3 space. In January alone, we looked at 419 companies across the team, obviously, across the world. And there's a lot of interesting strategies companies are doing in order to navigate that market and get interest from VCs, but both ecosystem partners as well as investors. So, you know, here's a couple of interesting companies I want to talk about, and some of the names might be familiar to you guys. Some a little further ahead, some a little earlier stage. And I just want to give a bit of an inspiration of what's happening in the space, what we see, right? In 2022, we looked at 4,500 companies in crypto and Web3. So like we see a lot of different things, and we kind of get an idea, okay, what's happening? So the first one I want to highlight is gaming, and it has a specific piece I want to highlight, which is rentals of assets in games, right? I think a lot of gamers probably know the problem that you become a great gamer and you have assets and people want to use it, but you cannot really monetize it. And Splinterlands, for example, is an interesting example. They run around 200,000 daily active users right now. They're one of the biggest games in the space, and they actually facilitated NFT rentals in the game and do about 4.2 million rentals a day. So people are actively using it to share assets with each other and help play the game and obviously earn as a side effect. So you see, I just mentioned one of them. There is different solutions of tackling that, right? So NFT rentals has become an interesting piece where a lot of companies also try to white label that infrastructure to enable rental places for different marketplaces and different game studios. We have active communities, right? And I think that's a really interesting point. Everybody is telling us we want to build an active community, right? Like our go-to-market strategy is building an active community. But how do you actually build an active community? It's not as easy said than done, right? Otherwise, everybody would have built an active community. And if you try to grow your follower on TikTok, on LinkedIn, on Instagram, you probably know it's not happening overnight, and you actually have to produce quality content, and you have to have a good strategy in order to do so. And you know, a lot of games we see have numbers, staggering numbers, have followers on Twitter and Discord and Telegram. But then we dig down and actually check, okay, on a day-to-day basis, how many people are responding, how many people are sending questions, and like sort of analyze the community in itself. And then we see big gaps where like the community isn't as active as we see, or predominantly the company is pushing content, but it doesn't get a lot of attention or affection. You have verified gameplay. I mean, a lot of investors moved away from investing in pure games to invest in game studios, which has a very easy background. It's diversifying risk, right? If you're a game studio, it's easy to bet on 10 potential games than on one game to be successful. That's also like what Splinterlands, for example, is doing. They were like, had a really strong game, but now they realized, okay, in order to raise further funding, we need to diversify that. And, unique reward systems kind of want to bring a different twist in here. The challenge also for a lot of investors in gaming right now is that you don't really have any recurring revenue stream for the most part, right? Most of the companies that sold NFTs, or like they have token generated revenue, or maybe even rentals in that sense. But like from a recurring revenue perspective, we don't see a lot of stuff happening. So like, is there a white label product you can launch as a game studio in order to facilitate other people using your infrastructure if you've figured it out, right? That's what Splinterlands was trying to do, of effectively enabling a gasless infrastructure where you have a high put-through organization. And they, for example, facilitated 1.8 billion transactions on chain over the last 3 years, which is technically more than whole Ethereum combined. Another interesting piece where we see a lot of attention, and I recently talked to H&M Ventures and L'Oreal's venture arm and many others, they're all looking into the NFT